Good afternoon, everybody. It is Thursday, 12 noon. This is Hard Money in the Headlines. I'm Stephen Sless, and with me is my esteemed colleague, Miss Jess Franta. Hey, Jess.
Sless and Jess.
Sless and Jess. Some would say, Jess, some would say more with Jess and Sless. Is it Jess and Sless or Sless and Jess? What are we going with here?
You and I had this debate,
Yeah,
yeah, I don't know. Really, the most important
I
part
think
of
you
it
go
is that,
first.
well, thank you. It's
Ladies
really like
first.
Sless and Shine. What we did come up with is Sless and Shine. It doesn't rhyme. So, and then really, yeah. So that here we are.
Here we are. Here we are. How are you today?
Very well. How are you doing?
Doing great. Another crazy
Yeah.
day in the life of Trius Lending Partners. No different than every day. Excited to be with you. Excited to talk some hard money in the headlines. What are we
Yeah.
talking about?
Well, yeah, everything. I mean, everything's in the
What's in the
headlines, but
headlines today?
yeah, everything. So, and I like this. I'm excited because, obviously, so Josh Shine, our CEO, he and I often do presentations together. I think this might be our first. And I think what's
Think
pretty
it
neat is
is. Yeah.
that day to day, you really are working in particular, obviously, COO, you're in charge of it all, but operations, you work a lot with our borrowers, our operations, our underwriting team, our sales team. And I'm often day to day, our paths don't always cross. And I'm on the investor relations side of it, talking to our investors. And so I think what's going to be fun today is that we can kind of bring those different perspectives and ongoing conversations we're both having and kind of marry them up as it relates to some of like the headlines, which there are a lot. Um, I will say this. So because I'm talking to investors every single day, many times a day, multiple times a day, the most common question I am currently getting is interest rates. So, and more
Mm.
specifically, it's not even a question so much as what do we think is going to happen with interest rates? The question is really how have the changes in interest rates, slowly coming down, but just also their continuance to be in the news, like how is that impacting our business and what it looks like for Trius? And of course, how it impacts our business does have obviously, is within the context of greater economic considerations. So I know my answer, but let you go first. What would you say? How are interest rates kind of currently affecting us today? And what do you see coming?
Yeah, I mean, we certainly get that question on the sales side quite a bit, and then just being out and about, I get that all the time from friends, and it's look, we at Trius Lending in the private lending world, we're sort of interest rate agnostic, right? Like, so we're
Hmm.
on the private lending side, we dictate our interest rates. We're not tied to Wall Street. We're not tied to any other marketplace. Now, where it does affect us is on the long-term loans, the exit loans, right? DSCR loans being the most common exit loan from a Trius hard money loan. And sure, we've seen those rates sort of be high and stay high for quite a while now. We do see trends and signs that they are slowly coming down. Where it affects our borrowers is one, properties aren't cash flowing like they once were, right? When
Right.
rates
Yep.
were 3 and 4%, you were seeing a lot more cash flow on properties, and these holds, the hold strategy was a lot more lucrative. So we are seeing a lot more flipping now. Flipping is sort of back, and our borrowers are flipping successfully.
Mhm.
It affects us in the, you like to call it the velocity of capital, right?
Yeah.
It's a little bit more difficult to exit a loan. DSCR loans are more stringent, and
Mhm.
with rates being higher, it does present challenges for those borrowers. But for us, business is great. We had a great year of growth last year.
Mhm.
We continue to grow. We continue to do big things, and we're on the day to day on the hard money side, really not impacted by interest rates at all.
I'm
What do
curious.
you say?
So, yeah, no, and of course, as everybody, if you followed along with Trius at all, or if you haven't, this is the first time you've heard from me. I came to Trius because I've been a borrower and continue to do some real estate personally on the side. And a cool part of the Trius Lending Partner story, of course, that about 40% of our borrowers are repeat borrowers, which means they're experienced and they're ever more experienced. I'm curious, Steve, are you seeing as it relates to when we're working with those experienced borrowers, are their behaviors changing at all? Meaning, or are they worried about different things because of these exit strategies, because of, more stringent debt service coverage ratios, instead of, if DSCR lenders used to do maybe up to 80% total loan to value, now they're
Mhm.
looking at 70. Are you seeing them go trying to do small multifamily, especially as they've gained experience, or small commercial even, or anything like that going on?
It's almost like you see our portfolio of business every day, Jess.
It's almost
You
like
got
I
you
see
got
it
you
every
got some
day.
inside intel there. Uh,
No.
Look, great question. Yes, yes. Our most seasoned and savvy investors are. We are seeing trends that they are pivoting to multifamily properties that give them better opportunity to cash flow, as opposed to a single family residence where you have one renter. And there's might be several $100 or even a couple $100 or even less than a couple $100 in cash flow a month. Yet now sometimes it still could be worth it because again, you're riding that long-term rate wave of property appreciation, all the benefits that come with home ownership, and those are valid as well. But from a cash flow position, we do see our borrowers trending towards the multifamily. Small commercial has been very popular as well. Strip centers, just opportunities where there's multiple tenants in properties. We have seen sort of a move to that because cash flowing has been a little bit more challenging on the single family residence.
Yeah, and I think that also brings up also kind of, and when I'm talking to investors, I often kind of just, simplify it down to headwinds and tailwinds, right? And in the years during COVID and kind of immediately thereafter, you had a lot of tailwinds, not just in appreciation, but these lower overall debt service, long-term financing and everything like that. And of course, in the background, the headwinds were building. And so it's not just the interest rates themselves, which of course had then gone up and have been coming down a little bit, but now property taxes, right? All these
Mm,
municipalities, as the appreciation had occurred, there's, every time there is a real estate transaction, they're using it as an opportunity, essentially recognize that increase in value. So property tax increases and insurance, and I know insurance in particular has been a national headline, not really one that's affected us, especially in the mid-Atlantic and at Trius Lending Partners, because we haven't had some of the emergencies that other parts of the world. Florida, I live in Washington State. We obviously had flooding, so we haven't had some of those insurance pressures. But I think broad based across the nation, you have seen pressure on the cost for insurance as a whole. So headwinds and all of that, to your point, I think compounds it further and does make it a little bit more difficult, to get that cash flow. So
yeah.
I think small multifamily really has become is a
Yeah,
good
and
option.
it puts a lot of pressure on our borrowers to execute quickly. Uh,
Yep.
we're seeing some adjustments in rehab loans as well. Maybe not doing such extensive rehabs. Coming
Hmm.
in, stabilizing the property, making it a nice place for somebody to rent.
Hmm.
Without and maybe when interest rates were lower, they were doing more to the homes. Maybe they were, you know, doing the granite countertops instead of the
Right.
Formica countertops. I mean, so we are seeing a movement to lessen the rehab loan, ultimately making that lesser of a loan amount and giving the owner a better opportunity to cash flow in the property and make these deals more lucrative.
Yeah, absolutely. The nice thing is we are still seeing rental rates do incredibly well, be incredibly strong as it relates to that single family home in the mid Atlantic, and actually continue to appreciate a little bit. So that's been a tailwind, again, and there is
Yeah.
kind of that balance, and it's just being really, really aware, which is what, again, I don't get to live it day to day like you do as we underwrite and everything, but that awareness. So unless we've got more on that subject, lots of headlines. So if you're good, I'm going to hit you with another one. You ready?
Hit me. You do every
All
day.
right. This
So
one's big. I know, metaphorically, literally. Okay, this is a big one. So obviously, potential executive orders. Well, an executive order, especially as it relates to institutional investment into single family homes. What do you think? Any thoughts on the impact, especially impact as it relates to the Mid Atlantic market?
yeah, this has been a huge topic of conversation lately. I can't tell you the amount of texts and calls I've gotten with
Yeah.
this same question.
Right.
Look, I think time will tell. My opinion, of course, is only my opinion, but I believe that in the greater Mid Atlantic, we're not going to be all that impacted. I think there's been a lot of conversation internally about this, right, too. And we've talked about,
Mhm,
the big emerging markets, your Texas, parts of
mhm,
Florida.
mhm,
Those are where really the saturation of institutional capital is being deployed to. And you
mhm,
see the big Wall Street firms buying up just huge amounts of land, and they're developing projects, and they're buying the single family rentals, which the executive order hopes to stop. I don't see it impacting our business all that much. Certainly not going
mhm.
to impact our borrowers here in the Mid-Atlantic. I don't believe you have a lot of institutional capital competition here locally. Again, time will tell. You being certainly more of our real estate geek, I mean, I'd love your input on this. I mean, you track this closer than anybody I know. What are your thoughts?
Yeah, concur. I don't think any, as it relates to Trius Lending Partners, is of course what we're thinking about daily. No real immediate impact. It's a lot of a headline, right? And if you read deeper into the executive order itself, there's not like an immediate force of sale of properties or anything. And of course, from a business perspective, what these massive institutional investors are doing, how they move, the sums of money they move in. Candidly, it's very different from Trius Lending Partners. It's very different from our borrowers who are, small mom and pop type shops. They've got one, two, three rentals. Maybe they're working a full time job and doing this on the side, so very different deals. And then to your point, from a geographic perspective, they're just in different areas where they can move the amount of money they need to move in the scope and scale that they need to move it. And what I think is really interesting is that it's not, the headline is almost maybe a Trojan horse for kind of the larger issue, which is like just greater housing shortage, and then that gets into, we won't get into it today, but these kind of macroeconomic considerations of just the cost of building a new house, the continuing impacts of previous inflation, labor costs, like everything as it puts towards it. I mean, you just literally said, as our borrowers are taking a look at like, well, do I put in a really nice laminate countertop or can I do the quartz? Like that's, at the lowest level, these are the decisions occurring because they are reflective of larger level, considerations going on throughout the country. So I think it's a really interesting headline. It's not impactful to us today, but I do think it points to these broader considerations and things that we do want to keep our eye on. Like I said, inflation, costs of rehab, housing shortage, the need for increased housing. But
Yeah,
just
and look, I mean, I think, removing these massive conglomerate institutional lenders from remotely competing with our smaller investors is certainly going to be a benefit to the
yeah,
smaller investor that we work with. Again, so to your point, not a whole lot of impact in the greater Mid-Atlantic, but certainly won't harm the investors that we work with
right.
on a day-to-day basis. And again, time will tell how much it aids them. But look, having institutional money out of the smaller single family individual home
Mhm.
market, I think is going to be a benefit to some.
Yeah. And I think final thought, we are a huge fan, just, the employees of Trice. I mean, we are believers in home ownership. We're believers in, bringing great quality products that people can live in, be it as rentals, maybe as that's where people are at, or maybe it's, a flip that we helped finance and now it's going to a first time home buyer. So I know it's something I feel personally very passionate about and stuff. So I guess it's exciting at that level because, it's kind of at the core of who we are and what we do. Yeah.
Absolutely. Yeah.
Right
Well
on.
said.
Thank you. Thank you. All right. Here we go. I've got another question for you.
Here we go.
The stock market.
Ooh.
Dun, dun, dun. I mean, it continues to do incredibly well, right?
Yeah.
And talk about headlines. You've got your crash, folks. You've got AI as the bubble. You've got, general fundamentals that remain in place, and it continues to be kind of steady as she goes, reaching new all-time highs on what almost appears to be like a weekly basis. I mean, what's your take on kind of stock market, greater market conditions? Any impact again for Trius Lending Partners? Importance of the headlines? What do you
Yeah.
think?
Look, I think at the end of the day, it all comes down to asset allocation, right? Making sure that your assets are spread across a variety of investments
Mhm.
to your liking, right? Some are going to be more conservative, some are going to be more aggressive. We offer a very conservative approach to investing. I always say, whenever I meet with a potential investor, we want to, by design, be the most boring thing in your portfolio. That's not to say
Yep.
that you shouldn't be invested in other things. Yes, the stock market has done well. But you always have that risk in the stock market of that bathtub effect. There's always going to be
Mhm.
little waves, right? Hopefully, we don't see the big waves. Sometimes we do. I think if you're an investor, sure, you're going to have money in the markets. Um,
Mhm.
if you've been in the markets for the past 10 years, you've done really well. You've had some scary times. COVID was a scary time for some in the market, and you've had
Mhm.
times where, you're counting your money and you can't count it fast enough. Um,
Mhm.
but it's important to have your assets allocated properly and to be well diversified. So
Mhm.
diversification into real estate, diversification into the stock markets, some aggressive, some conservative. And it's all about just finding that balance. Who knows? I mean, there's headlines, there's news, it seems like the stock market has been able to rebound through circumstances where in prior decades you wouldn't expect for the market to be so resilient. It's been a really resilient market. And I don't see that changing anytime soon, sort of irregardless of the headlines, right? The market has proven
Yeah.
it continues to go up despite a lot happening in the world,
Yeah.
globally and here nationally. Um,
Yep.
so yeah, I think we continue to be steady Eddie. Our approach is completely different. We're uncorrelated to the markets. We're
Mhm.
uncorrelated to the stock market. Our returns are fixed returns backed by first lien position mortgages. That's sort of our model. So I think it
Yeah.
blends well in any portfolio where you're just trying to find that right allocation of assets. What says you, Jess?
Yeah, I like the use when you said uncorrelated. And it's funny, you just end up talking to investors and, the conversation will kind of wander and you'll end up like talking about the stock market a little bit and nobody knows, right? If we all knew, then honestly, we'd be all in because then we'd, be infinitely wealthy. So no idea what it looks like 3, 6, 9, 12 months from now. I think what is
Your
interesting,
financial advisor doesn't have a crystal ball. Mine does.
right. They say they
I'll make an
do.
intro.
They say they do. I will say from, during these conversations, we've seen from a Trice Lending Partners perspective, we actually have seen a fair amount of growth of investors through like self-directed IRAs and 401ks,
Yeah.
which is something we can support. And so I think if you're watching people to see what they're doing, and if that's any kind of indication, we are seeing folks diversify maybe their current holdings. I'm not saying 100%, I'm not even saying at 50%, but maybe some
Hmm.
portion of their holdings away from the market to have some real estate, something to your point that's a little more uncorrelated. So we've seen investor growth through that. That is the most anecdotal response. I don't, that is the least academic thing I could say, but we don't day to day. I don't think we are too worried about it. Like I said, I'm always kind of more curious about effects, inflationary effects, or other things that can affect our borrowers. So, yeah, stock market, big headline, not necessarily for us.
What do you see, Jess, talking to investors? Are there investors with a lot of cash on the sidelines that are sort of hesitant about the markets and where to put it? I mean, I've talked to prospective investors and our current investor base, and it seems like there is sort of despite the market doing really well and being pretty consistent over the past decade, it just seems like there's a little bit of anxiety and folks sort of do have just cash sitting around waiting to deploy.
Yes. I mean, I know it's like the shortest answer ever, but yeah, short answer. Yes. Again, it's, the conversation's always limited in particular to Trius Lending Partners, maybe their current investment with us. Often they are asking a lot of the questions we've covered already, this afternoon, are we getting impacted by interest rates? Because they may be looking to increase, a portion of their investment or portfolio with us, in response to maybe their personal concerns. But yeah, I am definitely seeing cash on the sidelines, um, a wariness, a general kind of wariness, and kind of a watchfulness. Um, and I think that's smart. And I mean, but we're always going to say that because I think we're pretty inherently cautious business, and we run
Yeah.
things, pretty conservatively. So, the type of investor we have with us is also going to probably kind of mirror some of those same values. So it's almost a little bit of an echo chamber, perhaps. But yeah, definitely seeing that. But when I end up in those conversations with them, I will say this, like, there's a lot we're still really excited about, right? Like, there's a lot. I want to be really clear. There's actually, because of all this, in spite of all this, and then therefore because of it, we actually remain more committed, more excited about real estate than ever, and kind of the value it brings and the stability it brings. And I know, we just did our annual offsite for 2 days, and we met and we talked about a lot of, one of those big things we talk about is growth. And in particular, when I talk to investors, I'm like, we are excited to continue growing. And in particular, there's some markets we're excited about. We really like Virginia and the Carolinas. And I don't ever go too deep into it because, again, it's not the part of the
Hmm.
world in our business I live. But do you have any kind of thoughts about that?
Oh, we're seeing huge opportunity in those markets that you mentioned. All of
Hmm.
Virginia right now is just hot, and I think sometimes we get caught in the bubble that is the real estate climate in Baltimore, which
Hmm.
you and Josh were on here not too long ago talking about Baltimore City and the challenges and the concerns with Baltimore City real estate right now. But it's almost like the rest of the country. There are a lot of hot spots. We are doing a lot of business in Virginia. We're doing a lot of business in the Carolinas. We want to be doing more businesses in those areas. We're very bullish on the underwriting side, on the front end of our business. We're very bullish on those markets.
Hmm.
Pennsylvania, very, very good market there right now. And of course, in our backyard, Maryland is a great and historically always has been a great real estate market. The proximity to DC, government jobs, there is a lot to be bullish about on in Baltimore. And look, despite the city's challenges, right, our borrowers continue to find good deals, good properties in good areas of Baltimore City, albeit we are a lot more conservative in the city in underwriting deals than we ever have been before.
Hmm.
But there's pockets of opportunity everywhere. We have the benefit of seeing these pockets of opportunity every day, and I would encourage anybody, if you're looking to flip a house, if you're looking to get into real estate, if you're looking for a buy and hold, or just looking to have a conversation about, where do I go? Where do I pivot? What's the market like? Reach out. Happy to have a conversation. I'll jump on a call. I know Jess will jump on a call and talk with real estate to anybody. Be prepared for a
Hmm.
3 hour call there because this girl knows her real estate. But talk to somebody here. We
Yeah.
have we have the ability to sort of understand markets and chart trends prior to them coming to light, right? We knew
Hmm.
about the Virginia market. Jess, you were calling out 2 years ago, and now we're seeing
Hmm.
this big boom in Virginia Beach specifically, Central Virginia. Um, and we
Hmm.
have the ability to see that because we have the ability to see every deal that comes through here, and even the deals that don't work. Those are a learning experience for us as well. Why aren't they
Yeah.
working? Why is that property not cash flowing? Why are comps lower in this area than that area? So I just encourage everybody, reach out, let's have a conversation about real estate and what it could do for you and what the opportunities are.
Yeah, awesome. Yeah, I am personally, I remain very committed to Virginia, but I just think the growth, and again, we specialize also in those secondary and tertiary markets. Another reason why I really like
Yeah.
the growth that's been occurring in North Carolina, South Carolina. You don't find us in New York City. It's not who we are. So when we get excited about stuff and looking for growth, it's also kind of in the context of these markets that are right outside major cities are seeing
Yeah.
growth in terms of employment opportunities, healthcare services, education stuff, and you're seeing those kind of markets in there. So yeah,
Yeah.
that's
Our eyes
been
light up when we see
our
Richmond,
life.
Virginia. It's like,
We are right now. Like, we get excited. We're like, let's do it.
yeah,
So
yeah,
yeah, and that's those are tailwinds, like all those things that relates to borrowers, kind of going back to that thematic. When you see that kind of stuff, they're tailwinds, and they're just nothing but good. So I mean, I guess kind of we've covered a lot, and we actually did it expediently. Look at us. I mean, looking forward, I'd reference that we do this 2 day offsite. We talk about
yeah.
opportunities and growth. We're doing it in the context of everything we see, like what you're talking about, everything that comes across underwriting's desk. I mean, do you have any predictions for 2026? Any thoughts going forward?
Well, it's good timing because we just made our predictions in our offsite a couple weeks ago, and we set some pretty big lofty goals for this year and for the years to come. I predict Trius lending is going to grow again this year in a very safe, conservative way, but we're going to see very solid, strong growth because of the items that we've listed
Mhm.
during our conversation here, right? A lot of growth in the markets that we mentioned, a lot of repeat borrowers that continue to come back to Trius for the fast, flexible, reliable service that they get with us. So I think it's going to be a great year. I think we're going to continue to see more multifamily, more mixed use properties, more in the small balance commercial, small balance meaning 500,000 to 2.5, 3 million. I'm not talking about a 5 million, 6 million or dollar project or upwards of that, but we sort of thrive in that smaller balance commercial. We're nimble and we can close those loans much quicker than a bank can. And that provides us an upper hand as well. There's not a lot of true private lending institutions that are lending on those type of loans and can move as quickly as we can. So, look, we're really bullish. The Mid-Atlantic is a great real estate market, continues to be and has been for a long time, and we predict that it will be into the future. Um, we continue to bring in new investors.
Mhm.
Jessica and her team do a great job at that. And, kudos to you, Jess. We've seen a real youth movement on the investor
Mhm.
side. And I do want you to chat on that for a moment before we jump off here. Younger investors investing with Trius to grow their
Mhm.
wealth. I think that continues to be a trend for us, and it's something that we do really well is consulting people, understanding what their goals are, and helping them to build wealth, whether that's wealth acquiring real estate and holding it or flipping it, or whether that's passive wealth, parking their money and letting that money make a really healthy rate of return. So, um, certainly no shortage of challenges, particularly here in Baltimore. We're still being really careful of that market, but I think it's going to be a big 2026 and beyond. What about you?
Yeah. Yeah, agreed. I think 2026, we covered a lot. We talked about kind of the pressures for our borrowers. And so I think it'll be really a year of, I mean, for us, it's literally what we eat, breathe, and sleep, but just really great underwriting and really understanding, so that our borrowers are successful, because that's a huge part of it as well. But making sure, that everything is accounted for when we're looking at a deal and that they're going to be able to be successful, or it's going to cash flow and account for all of that. So really, it's a pretty boring answer, but I mean, arguably, we're a wonderfully boring company in some ways. So, a year of sticking to the basics and sticking to who we are and executing it incredibly well. And to your point, I think what's, on the investor relations side, been really exciting has been continued growth, especially through investor referrals. Pretty much almost all the folks that invest with us come
Yeah.
via some referral or connection, which we're always grateful for. And it's been really encouraging to see a lot more folks that are still kind of in the wealth building phase, so definitely in their W-2 income earning years and are saving and investing, and that we get to be a part of that. Again, probably not all of it, often in the stock market and in Bitcoin, whatever they are, but that we're a part of that. And I think what we have to offer when they're doing their own individual planning is something really strong and poignant, which is very consistent monthly cash flow,
Yeah.
stable cash flow that they can plan on, that they may not even have to, wait for. There's no tax penalty. We pay it out each month. So unlike, your IRA or your Roth IRA, there's no minimum age. It's a value we bring starting day one that you invest with us. And I think that has resonated as well as people are looking at their own journeys and when they want to retire. Maybe they want to retire early, maybe they want to be retired by 45, or maybe be able to change careers. We get to kind of be part of like their greater life planning and wealth planning. Those conversations are super fun. Always grateful. So that's been really exciting, is to have those, and we're having a bunch of them. So yeah, that's
Absolutely.
about it.
Absolutely.
Mhm.
Did we have any questions in the chat?
I don't think so. Oh, uh-oh. Oh, we might have been like, oh no, I think we're okay. um Oh, we had team members say hello. Hi, Henry. That's awesome. So my
All
dad's
right.
on these as well. So that's all good.
Love it. Love it.
Yeah. Awesome.
All right. Well, this has been Hard Money in the Headlines with Jess and Sless. So until next time, everybody, thank you.
Yeah. Thank you for
See you
joining.
soon.
See you soon. Bye.